Starting with Transaction Capital, which is a non-deposit taking financial services group operating in asset-backed lending, mainly in South Africa.
Its biggest business by far is taxi finance, SA Taxi Finance, and that's very interesting, isn't it, with the taxi protest that happened in Gauteng last week, Thursday.
And ongoing taxi wars must
That was
put a little
name
risk
that kept coming up
into the overall investment scenario here. Market cap 8.7 billion rand, so we're not talking about a small company. PE ratio of 17.3 and a dividend yield of 2.3%. Let's talk Transaction Capital and whether the risk really is worth, well, the potential reward.
Sure. So it's almost a tale of two stories, because you've mentioned the bad side of it, right? So we have the taxi wars, we're in recession, things are difficult at the moment. But actually, at their last results, they produced fairly good results, I think. So they're looking at their non-performing loans falling down to 17.2% from a previous 18%. They're targeting 15%. So actually, if they get it right, then I think we could be onto something here. You know, you also have to talk about kind of the Uberization of the market. You have to talk about the public transport and the competition. Not great, but I think probably longer term play. So maybe I would say, if you look at kind of where it is, the taxi industry in South Africa, or this specific sector of the taxi industry, probably still has a bit of runway.
Well, Anthea, as you say, let's have a look at where it is. And Paul, this will give you a sense. That's not a bad looking graph.
I like this company. You know, the team that manages it under the leadership now of Dave Hurwitz.
It was Mark Lamberti.
Yeah, he was there, but he was almost like a professional CEO that got brought in for the listing. And then once it had got up and running, I think the guys that had been behind it all along, Jonathan Jorno, Sean Mendelowitz, sorry, Michael Mendelowitz. What am I doing? I got all the wrong names.
Are you right? You know, you're in the Hot Stock studio.
Dave
it is Tuesday.
Is the guy.
No, it's
you
not Tuesday. What day is it? What day? We Thursday. Oh my goodness, we're really not doing ourselves any favors today. Shall we try that again?
So these guys are well established. They've got a corporate debt program. I mean, the taxi thing, it's interesting, isn't it? 15% bad debt write-offs. That's why the taxi guys complain that the interest rates are too high, but that's what it needs to be at, given the risk of the industry. People borrow money up to R1 million to buy one of those new Quantums. Then they crash it, they stop paying, or they change their bank account details. They give them the runaround. It's not an easy industry to borrow.
We've got the picture. We've got the picture. Anthea, I don't want you to worry.
Returns.
I know that we've given you a little bit of a shock with our state of mind today, but we are in control, and Paul does know what he's doing with the portfolio.
But there's more to this business,
yes.
Remember. There's also the credit and debt collection and debt management side of the business, which is pretty attractive too, I think.
Especially with the current consumer.
Certainly, yeah. So I would say for the current consumer, it's a bit worrying. But as Paul says, like, it's a nice diversified business. They also have integrated vertically. So they're buying businesses where they can take the taxi and repair it, and the insurance. So there's a couple of things about this business. And also earnings growth at 21%. You don't see that very often in this environment.
So worth taking a bet on, hot or not, Anthea? Hot. Paul?
Yep, I like it too. I think they're going to continue to do well. I've got a sense that also they're in acquisition mode, so they're going to be adding other financial services type businesses to the mix. So
that's what you said about MTN yesterday. You wanted Rob Shooter and Stephen Van Coller to go on a big acquisition spree. And
well, of course, it's one of the ways companies can deliver the growth that the market wants.
No, I'm just talking about that 2.6% rise in price could be because they're going to take your advice.